Cape Coral, Florida, once hailed as a sun-drenched paradise for homebuyers and investors alike, is now the epicenter of one of the most shocking housing market downturns the state has seen in decades. For years, the city's golden beaches, sprawling neighborhoods, and booming real estate market promised both lifestyle and profit. Families moved in droves, investors snapped up homes with all-cash offers, and local developers raced to meet the insatiable demand. It seemed unstoppable, a Florida dream written in stucco and tile. But 2025 has rewritten that story. In just 2 short years, Cape Coral's median home prices have tumbled 11%, dropping from a peak of $419,000 to around $361,250. Over half of all listed homes have had to cut their prices, and nearly 8% of homeowners now find themselves underwater on their mortgages. Homes that once sparked bidding wars now linger on the market for weeks, sometimes months, while buyers hesitate, wary of plunging values and rising costs. The city that once embodied the promise of upward mobility now feels frozen in uncertainty. The panic is real. Residents who once celebrated rising equity are now calculating losses in their heads. Retirees on fixed incomes face insurance premiums that rival their mortgage payments. Young families wonder whether staying in Cape Coral is financially sustainable at all. Meanwhile, investors and developers who once saw only upside are pausing, recalculating, and, in some cases, retreating. Amid this turmoil, Florida's governor has publicly erupted, declaring a state of emergency in Cape Coral and calling for urgent legislative action. But beyond politics and policy, the story is ultimately about the people living through it. Ordinary Floridians confronting a market that no longer guarantees security or prosperity. The question hanging over the city is simple yet profound. Is this a temporary slowdown, or is Cape Coral the canary signaling a deeper housing crisis across Florida? Cape Coral's housing boom, the rise before the fall. Cape Coral wasn't always on the national radar as a real estate powerhouse. A quiet waterfront city along Florida's Gulf Coast, it offered wide canals, affordable lots, and a lifestyle that combined the lure of sunshine with the charm of suburban living. But between 2015 and 2022, the city underwent a transformation that would capture the imagination of buyers and investors alike. Median home prices surged, new neighborhoods sprang up almost overnight, and Cape Coral became synonymous with opportunity and growth. Several factors fueled this boom. First, Florida's tax advantages compared to northern states attracted families and retirees looking to stretch their dollars. Second, the rise of remote work allowed young professionals to leave high-cost metros like New York, Chicago, and Boston, chasing a better lifestyle in Florida's sun-drenched communities. Third, developers and builders responded with unprecedented speed, constructing sprawling subdivisions and waterfront luxury homes to meet skyrocketing demand. The result was a city that felt alive with possibility. Homes sold quickly, and the local economy thrived on construction, real estate services, and related businesses. Investors played a pivotal role in pushing Cape Coral's market to dizzying heights. Hedge funds, private equity firms, and out-of-state buyers swooped in, buying homes in bulk, often paying all cash and outbidding locals. In many ways, Cape Coral became a playground for investors, with ordinary families struggling to compete. It wasn't just about buying a home anymore. It was about speculation, flipping, and riding the wave of appreciation that seemed endless. The pandemic added fuel to the fire. As crowded urban centers imposed lockdowns, Florida's relatively looser restrictions, combined with spacious homes and outdoor lifestyles, made Cape Coral irresistible. Suddenly, demand was off the charts. Homes that might have lingered on the market for weeks were selling in days. Bidding wars became routine, with prices climbing well above asking. By 2022, the city's median home price had peaked at $419,000, marking an astonishing rise over just a few years. But beneath the gleaming facades of Cape Coral's boom, early warning signs were already forming. Wages lagged behind skyrocketing home costs, insurance premiums quietly crept higher, and new developments began to saturate the market. While the surface told a story of unshakable growth, the foundation was growing unstable. setting the stage for a market reversal that no one could ignore. Cracks in the foundation, early warning signs. Even during the height of Cape Coral's real estate boom, subtle signs of stress were starting to emerge, signals that many ignored in the excitement of rising home values and rapid development. At first, these cracks were easy to overlook. An increase in insurance premiums here, a slow month of pending sales there. But by late 2022, a combination of economic, environmental, and structural pressures began to reveal that Cape Coral's housing market might not be as invincible as it seemed. One of the first warning signs came from insurance costs. Florida, no stranger to hurricanes and flooding, was seeing premiums rise sharply, and Cape Coral was particularly vulnerable. Homeowners were suddenly facing policies that doubled or even tripled in price over a few years. For families on fixed or modest incomes, these premiums began to rival mortgage payments, forcing difficult financial decisions. Many buyers started to calculate the true cost of home ownership, not just the mortgage, but insurance, taxes, and maintenance. And for some, the numbers no longer added up. Another factor was overbuilding. Developers, responding to the frenzy of demand, poured new homes onto the market. By 2023, inventories were swelling. What had once been a seller's paradise, where homes sold within days at record prices, was now starting to shift. Houses lingered longer on the market, and some sellers were forced to reduce prices to attract buyers. Oversupply meant that even motivated buyers could negotiate, a sharp reversal from the all-cash, bidding war days of the pandemic boom. Economic pressures also played a role. Local wages failed to keep pace with the skyrocketing cost of living, leaving many households stretched thin. Job growth in Cape Coral and the surrounding Lee County area couldn't fully absorb the influx of new residents, and for some families, the dream of owning a home began to feel out of reach. Affordability, the silent backbone of any sustainable housing market, was eroding quickly. Finally, there were early market signals that even casual observers could notice. Pending sales slowed, cancellations increased, and reports of underwater mortgages started appearing in real estate news. Realtors who had once juggled multiple offers for each listing began noticing homes sitting idle for weeks. The market's rhythm was changing, and while headlines still celebrated Florida's growth, insiders quietly feared a storm on the horizon. These early warning signs, subtle yet persistent, set the stage for the dramatic crash that would hit Cape Coral in 2025. What seemed unstoppable was starting to show its vulnerabilities, and for residents and investors alike, the question became, how bad would the fall be when the inevitable correction arrived? The crash hits Cape Coral in 2025. By 2025, the subtle warning signs had erupted into a full-blown housing crisis. Cape Coral, once a symbol of Florida's real estate boom, now stood at the center of a citywide panic. The numbers were impossible to ignore. Median home prices had plummeted 11% in just 2 years, falling from a peak of $419,000 to around $361,250. Over half of all listings had seen price reductions, and nearly 8% of homeowners were underwater, owing more on their mortgages than their homes were currently worth. The pace of the market had reversed dramatically. Homes that had previously sold within days lingered for weeks, sometimes months, as buyers hesitated to commit in a market showing signs of collapse. Open houses, once bustling with eager families and investors, were now sparsely attended, a stark visual of the fear gripping the community. Pending sales fell through at unprecedented rates, leaving sellers scrambling to adjust prices and salvage deals. The frenzy of the past decade had evaporated almost overnight. The human impact was immediate and profound. Maria Hernandez, a nurse who purchased her first home in Cape Coral in 2022, now faced a mortgage of $420,000 on a house valued at just $360,000. "I feel trapped," she admitted. "If I sell, I lose everything. If I stay, I can barely afford insurance and taxes." Her story echoed throughout the city, from retirees on fixed incomes struggling with soaring premiums to young families questioning whether staying in Cape Coral was financially viable. Condo owners faced their own nightmare. Following the implementation of Florida's new Building Safety Act, High-rises requiring extensive repairs imposed special assessments ranging from $50,000 to over $120,000 per unit. Lenders blacklisted more than 1,400 condos from financing, freezing sales and trapping owners in properties they could no longer afford to sell. Insurance costs, already among the highest in the nation, continued to climb, making homeownership increasingly untenable for many. Investors who had once fueled Cape Coral's growth began reassessing their bets. Hedge funds and corporate landlords slowed acquisitions, and some liquidated properties at small profits to minimize losses. Short-term rentals and Airbnbs, once cash cows, faced declining bookings and oversupply. The city's real estate ecosystem, developers, agents, contractors, and staging companies felt the ripple effects as projects stalled and sales dried up. In short, Cape Coral had gone from boomtown to cautionary tale in a matter of years. What had seemed like an unstoppable rise was now an undeniable crash, leaving residents, investors, and officials scrambling to navigate the new reality. The question that hung over the city wasn't just about prices, it was about survival, financial security, and the future of a community built on the promise of endless growth. The governor goes nuts. Political and public response. As Cape Coral's housing market spiraled downward, the state's political leadership could no longer stay on the sidelines. In an unprecedented display of frustration and urgency, Florida's governor publicly erupted during a press briefing, calling the situation a full-blown emergency and promising swift action to stabilize the market. Cameras captured a rare, almost theatrical moment. A governor pacing, gesturing emphatically, and demanding immediate solutions from both state agencies and local officials. His outburst wasn't merely performative. In response to the crash, he declared a temporary state of emergency for Cape Coral, unlocking resources intended to provide financial relief to homeowners facing skyrocketing insurance costs and negative equity. Emergency measures included moratoriums on certain foreclosures, state-backed assistance programs for first-time buyers, and incentives aimed at encouraging developers to halt speculative construction. The message was clear. The government was stepping in, but the situation was serious. Local reaction mirrored the intensity of the governor's response. Residents who had watched their home equity vanish felt a mix of relief and skepticism. While some welcomed state intervention, others questioned why it had taken a public meltdown to spur action. Homeowners associations held emergency meetings to discuss rising insurance bills and special assessments, while community leaders pushed for long-term solutions rather than temporary fixes. Realtors and developers, who had once thrived in Cape Coral's unstoppable market, were caught off guard by the political theater. Some worried that government interference might further complicate already fragile negotiations, while others recognized the necessity of stabilizing buyer confidence. Open houses, still struggling to draw attendees, now included discussions of potential government support alongside property tours, a surreal juxtaposition for a city that had once epitomized luxury and unbridled growth. The governor's dramatic reaction sent ripples beyond Cape Coral. Florida's real estate markets, from Fort Myers to Tampa, were suddenly under scrutiny as investors, lenders, and potential buyers recalibrated their expectations. National media outlets highlighted the governor's unusual behavior, framing it as a stark signal that the state's housing challenges were no longer abstract. They were urgent, visible, and affecting real people. In the midst of political upheaval, the core reality remained. Cape Coral's residents were living through a financial storm. The governor's outburst, while eye-catching, underscored a deeper truth. The housing market had become a matter of public concern, and the consequences of mismanagement or inaction could be felt by thousands of Floridians trying to protect their most valuable asset, their home. Factors fueling the collapse. Cape Coral's crash wasn't a sudden anomaly. It was the culmination of multiple pressures converging at once, each amplifying the other. Understanding why the market unraveled so dramatically in 2025 requires a closer look at the underlying factors that created this perfect storm. Overbuilding and oversupply were among the primary culprits. Developers, riding the wave of post-pandemic demand, poured hundreds of new homes onto the market in just a few short years. What had once been a seller's paradise where homes flew off listings within days, became a city crowded with unsold properties. By early 2025, over half of Cape Coral's listings had been reduced in price, a direct consequence of too many homes chasing too few buyers. This oversaturation not only slowed sales, but also eroded buyer confidence, creating a cycle of hesitation and declining offers. The insurance crisis further compounded the problem. Florida is notorious for hurricanes, flooding, and severe weather, and Cape Coral is particularly exposed. Homeowners' insurance premiums have skyrocketed, with some policies now exceeding $6,000 annually for a standard property, while coastal and waterfront homes see premiums climb well past $10,000. For many retirees and fixed-income families, this made owning a home financially untenable, forcing some to sell or consider relocating inland. The increased financial burden also deterred potential buyers, leaving homes sitting on the market longer. Economic pressures added another layer of strain. Local wages in Cape Coral and surrounding Lee County failed to keep pace with soaring home prices, leaving many families financially stretched. Rising property taxes, utility costs, and general living expenses compounded the squeeze, reducing disposable income and forcing potential buyers to pause or abandon their home ownership plans. The affordability gap, already a growing concern during the 2022 to 2023 period, had widened into a critical barrier. Finally, investor behavior played a pivotal role. Hedge funds, institutional buyers, and short-term rental investors had once fueled Cape Coral's meteoric rise, snapping up homes in bulk and driving up prices. By 2025, however, these same investors were slowing purchases, liquidating assets to secure small profits, and pulling back from the city entirely. This withdrawal removed a key driver of demand, leaving ordinary buyers to navigate a market still burdened by high prices and rising costs. In combination, these factors created a feedback loop. Oversupply slowed sales, high insurance and economic costs discouraged buyers, and investor retreat weakened demand further. The result was a market teetering on the edge, with homeowners, retirees, and first-time buyers all caught in a tightening financial vice. Cape Coral's collapse was not inevitable, but the conditions that fueled its rise had, in the end, sown the seeds of its fall. Human stories, residents caught in the middle. While numbers and charts tell one side of Cape Coral's housing collapse, the real story is human, and it's unfolding in living rooms, community centers, and kitchen tables across the city. Families, retirees, and young professionals are all grappling with the sudden reversal of a dream they once thought unshakable. Take Maria Hernandez, a nurse who purchased her first home in 2022 for $420,000. Within just a few years, the value of her property dropped to $361,250. She now faces a mortgage that exceeds the current value of her house, compounded by insurance premiums approaching $6,000 annually. "I feel trapped," she said. "If I sell, I lose everything. If I stay, I can barely afford the bills." Maria's struggle is far from unique. Thousands of Cape Coral residents find themselves underwater, balancing pride in home ownership with the stark reality of financial strain. Retirees, who flocked to Cape Coral seeking peace and predictability, are hit differently but just as hard. Many budgeted their golden years around manageable housing costs, only to see insurance premiums, property taxes, and special assessments surge unexpectedly. Bob and Linda Thompson, both in their 70s, purchased a modest canal front home in 2019. They now face annual insurance costs exceeding $10,000. "We never imagined that keeping our home would feel like a full-time job," Linda admitted. For retirees like the Thompsons, selling and relocating inland seems like the only viable option. Yet it comes with emotional costs, leaving behind communities, friends, and the dream of waterfront living. Young families are also navigating treacherous waters. First-time buyers, drawn by Cape Coral's post-pandemic boom and the allure of larger homes at lower prices than northern metros, now face financial uncertainty. Renters are feeling the pinch too. Landlords, contending with rising insurance and mortgage costs, are passing expenses on to tenants. Kevin, a 29-year-old tech worker, explained, "My rent has gone up 15% this year, but the building's value has dropped. It doesn't make sense." For younger residents, the market's collapse is more than financial. It's destabilizing, creating anxiety about their future in the city they once chose for opportunity and lifestyle. Even businesses tied to the housing market are feeling the ripple effect. Contractors who once thrived on new construction report dwindling projects, while real estate agents struggle to sell homes that linger unsold for weeks. Staging companies, landscaping crews, and local lenders, all part of the ecosystem that supported Cape Coral's boom, now report declining demand. The collapse is no longer just a homeowner's issue. It's an economic shock spreading throughout the community. Through all this, Cape Coral's residents share a common sentiment: uncertainty. The city that once promised upward mobility and sunshine-filled dreams now represents financial tension and tough choices. People are forced to weigh their attachment to home and community against the hard realities of declining property values, escalating costs, and an unpredictable market. In Cape Coral, the housing crash isn't just a statistic, it's lived, felt, and experienced every single day. For many, it has transformed the American dream into a cautionary tale, leaving families, retirees, and young professionals alike navigating a market that no longer guarantees stability or security. Market analysis, what the experts are saying, and the future outlook. As Cape Coral grapples with the sharpest housing downturn in decades, economists, real estate insiders, and policy analysts are sounding alarms, but not all agree on what comes next. Some see the city's decline as a temporary correction, a soft landing, after years of unsustainable growth. According to this view, home prices have simply realigned with local incomes, and buyers will return once insurance costs stabilize and interest rates ease. Proponents point out that Florida's sunny climate, low taxes, and lifestyle appeal continue to attract newcomers from northern states, supporting a floor under property values. Others, however, warn that Cape Coral may be the canary in the coal mine for a broader Florida housing crisis. Rapid overbuilding, surging insurance premiums, and a slowdown in investor activity create conditions for a deeper correction. With nearly half of homes requiring price reductions and pending sales falling through at record rates, some analysts argue that the market could face several more years of stagnation, or worse, a prolonged decline. Mortgage rates near 7% add another layer of stress, pricing out first-time buyers and slowing the pipeline of new home ownership. Financial institutions and investors are paying close attention. Hedge funds and institutional buyers that once drove Cape Coral's boom are slowing acquisitions, selling off properties at minimal profits, or holding inventory to avoid further losses. Lenders, wary of the risk, have tightened credit standards, particularly on condominiums with costly assessments or insurance uncertainties. This caution has created a bottleneck, leaving potential buyers frozen on the sidelines and homeowners stuck in a market that feels both volatile and opaque. For residents, the uncertainty is the most pressing issue. Families like Maria Hernandez's are caught in a daily struggle between finances and hope. Retirees calculate whether staying in their dream homes is feasible, while young professionals and renters navigate rising costs and declining options. The human stakes are clear. Cape Coral's housing market isn't just an economic story, it's a story about lives upended by forces beyond their control. Looking ahead, the city stands at a crossroads. A soft landing could restore stability, allowing supply and demand to rebalance over the next few years. A deeper correction, however, could reshape Cape Coral entirely, transforming it from a sun-soaked boomtown into a cautionary tale of overconfidence and unchecked growth. For now, homeowners, investors, and policymakers alike must navigate the uncertainty, knowing that the decisions made today will define the future of a city that once promised paradise but now wrestles with its own fragility.